Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, the consolidation in the markets does continue. And as a matter of fact, big tech is getting fairly tired after carrying the bags for the entire market over the last 2.5 weeks. Value names have been somewhat of a very weak point in the markets, and that simply continues. We've been talking about this rotation from value to tech now for the past 2.5 weeks, as we've been noticing that the markets were very, very top heavy, very consolidated in just a few names, and that cannot last forever. As you can see from the watch list here on my right-hand side, every single major sector in the market today ended up red. Healthcare and financials continue to be pain points in the market, and this decline in value has been one of the worst in a very long time. In terms of the Dow Jones has put in a 9th losing session in a row, the worst performance for that index, which is more value oriented, since 1978. So we are definitely in a market environment right now where we are lacking market breadth. And with a big day with Jerome Powell tomorrow and an interest rate decision and the summary of economic projections, things could possibly get a little bit volatile, especially if the Federal Reserve comments into the longer duration of the rate cuts, meaning if they keep them higher for longer, guys, the market is not going to like it. So in today's video, guys, we're going to do a few things together. Number one, we're going to do a technical analysis recap of all our major names and see exactly where the pain points in the markets are and what we can possibly expect in the foreseeable future in terms of that market rotation between tech and value sectors. Very important analysis. Thereafter, we're going to take a look at our big tech names, see how those are shaping up. Even though they've been carrying the market for 2.5 weeks, they might be getting a little bit tired. So now is kind of the time, if we are going to see some rotation from tech to value, it has to happen, because if not, we are going to see some consecutive declines in the SPY and possibly even the QQQs moving forward, extending our weekly consolidation in the rest of the markets. So we'll take a look at that. And then lastly, guys, take a brief look into my portfolio for a few of the opening trades today and what I am keeping into the rest of the week, despite tomorrow's very volatile event. So a lot to cover today, guys. Let us jump right into the action. So the SPY down a 0.41%, the QQQ is down 0.44%, and you will see from the heat map, guys, today, once again, it was not very good. Very top-heavy market once again. Apple, Microsoft carrying big tech, Tesla putting in another good day, but now we start to see some consolidation in a few of the names that have ran a lot. Amazon, Google, Meta consolidating a little bit, NVIDIA and semiconductors coming down still. We had some good outperformance from AVGO in the last 2 days since their earnings. However, that cannot last forever, guys. We need to see broad market performance. And curious enough, NVIDIA, since it's been added to the Dow Jones, has only been going down. You can see the pain continues. Financials, really some decent declines there. Healthcare continues to be a pain point for the market. And the bottom half of the market, industrials and everything else exposed to interest rates, remain fairly weak in the market. So a very top-heavy market, guys. The market is lacking breadth, and that cannot continue on forever. Moving on to the one-day relative, you can see that even better. Consumer cyclicals and healthcare with a little bit of outperformance here, but that is pretty much where it ended, right? Just a few names in healthcare were up. Surprisingly, the index, although on this page it says it's up 0.21, the XLV as a whole, guys, was actually flat, even declining. So I would take this one with a grain of salt. Only consumer cyclicals with a positive return today. The rest of everything to the downside, mimicking the performance of the last week. You can see consumer cyclicals, technology, communication services. Communication services, it's really at this point only Google and Meta carrying that whole sector, right? Everything else, guys, to the downside. So we need to see some new rotation in the markets. We need to see more broad-based market rallies if you really want to see the SPY continue on to the Santa Claus rally and the end of December rally. Now, December is traditionally a good month for the markets, but also keep in mind, September and October are supposed to be bad months for the market, and we went up. So is it possible that we end red in December? It is very possible, guys. Even though it is the historically best month of the year, it is not a 100% hit rate. The probabilities do favor green only 78% of the time, but that other 22%, you can end up red. So we'll see, guys. Very big day of trading tomorrow. Tomorrow, I'll remind you what we have. Tomorrow is the Federal Reserve interest rate decision. The odds are still for a 0.25 basis point cut. But the most important factor is going to be the summary of economic projections, where the Federal Reserve gives their expectations to where they see interest rates in the next 1, 2, and 3 years. If these projections here come in higher than expected, meaning rates higher for longer, I'm not too sure the markets are going to appreciate that just yet. So it's going to be a very volatile day tomorrow, which is why I have not deployed a lot of buying power. I made a couple little tiny plays today, but nothing too much. I'm waiting to get this big one out of the way, because if the markets do not like it, you guys know what's going to happen. We are going to head into further and further weekly consolidation, not only on the SPY, not only on the QQQs, but that may be the ultimate flush in financials, healthcare, and every single thing else. So keep that in mind for tomorrow, guys. A very, very big day. In terms of the earnings front that we have tomorrow, well, we have Micron, and at the end of the video, after the portfolio review, I will let you guys know how I'm going to play Micron earnings, because I am indeed going to play them. So with that out of the way, guys, let us dive into an article which happened today, and then I'm going to kind of explain what we're having with rotation right now. So take a look at this. Dow tumbles more than 260 points for the 9-day losing streak, its longest since 1978. So you have to pay special attention to this. Definitely a record-breaking environment. Not only that, but this one, right? The value index here has been down for 12 consecutive days in a row. That has actually never happened. So we're kind of seeing this kind of silent market, pullback right now, whereby you can't really see it in the SPY, you can't really see it in the QQQs, but you take a look at value names and they have been absolutely crushed. You can see it on the heat map, even on the in the last 1 month, right? Very top heavy market. Here's your last 1 month performance. If we were not carried by big tech and a few outperformers here in Walmart and Costco, the rest of the market, guys, really is not doing too well in terms of value names. So keep that in mind. Very, very important rotation right here. It entered the history books Tuesday with the first 9-day losing streak since 1978 once again. Now, the rotation into tech stocks and out of some of the more old economy stocks that gained in November following the re-election of Donald Trump, those stocks dominate the Dow rather than tech. And this is true, guys. The Dow is a price-weighted index. It is not a market cap-weighted index like this, where the biggest market caps have the most weight in the index. This is price-weighted plus a multiplication factor, which gives you the final number for the Dow Jones, the price that the Dow Jones is at, right? So the highest weightings here are the ones whose share prices are highest. And you can see Goldman Sachs, United Health, Microsoft is a very bullish point, but look at all the other names that have very high share prices, right? Home Depot, more of a defensive name, that's been down. Caterpillar, more of a defensive name, that has also been down, guys, for pretty much the last 9 days in a row. And when you go through this list and you identify the value names or financial names, you will see it's not very pretty. Financials have been just pretty much straight down for the last 12, 13 days at this point. Healthcare has been straight down for the last 10, 12 days at this point in time, right? And the Dow Jones, 9 days in a row. So you guys get the idea, right? When an index is weighted more value and more defensive, and all of those subsectors are not performing too well, that is why the Dow is coming down right now. In terms of the value index as a whole, it's the same concept. When you pull up the holdings for the IVE, you will see what are the top weightings. It's Berkshire, JP Morgan, oil companies, a Walmart, one of the brightest spots in that, Johnson & Johnson, Bank of America, United Health, Home Depot, Costco, and Chevron. So a lot of very large weights in terms of that. And a lot of these sectors have been out of favor in the last 2-3 weeks. Look at the exposure breakdown of that ETF. 25% in financials, 16% in healthcare. Those have not been doing too well over the last 2.5 weeks. Industrials as well have not been doing too well. Consumer staples, it really depends where you look. Walmart and Costco can kind of camouflage or mask the pain that's going on with the rest of the sector. But the rest of the sector is really not doing too well. So as you can see, guys, technology is only 8% weighted. That is why some of the value names have been coming, well, they're bringing down the indexes as a whole. So very, very curious rotation happening in the markets right now. But I do believe some names are starting to be ready for a bid. Berkshire being one of them. This is a classic breakout retest of the all-time highs, looking very good, coming down into support range right now, into consolidation, and the daily timeframes right now on Berkshire almost daily oversold conditions. This is when I really like picking up Berkshire because they don't really get there that often. And when they do, it tends to be a very good buying opportunity. Other names that we are possibly looking at for dips is something like Caterpillar, right? Caterpillar continuing on its decline, but same concept. If you look at the monthly looks good. Just a classic breakout retest for a monthly trend continuation. So these are starting to be the times where I'm looking maybe into also rotating into some of these value names that have been beaten down over the past couple of weeks, approaching, well, Caterpillar is not, but on the verge of coming into daily oversold conditions. Watch the historical RSI levels. If you can find some names that usually don't come down that much into daily oversold, and when they do, usually it's synonymous with a bounce, and you can line that up with beautiful support areas, well, you have a very decent trade opportunity on your hands, so pay special attention to that. Let's get back into the article, shall we? What's strange is that NVIDIA, a new tech member of the Dow that joined in November, replacing Intel, of course, has also struggled despite the tech sector's recent gains. Wall Street is waking up to the fact that the Trump presidency might not be as great for stocks as some people hoped. Financials and industrials jumped on his win, but now may have to face higher rates and trade uncertainties. And healthcare faces its greatest political risks in recent memory. So take this with a grain of salt. This is from David Russell, who's a market strategist here at TradeStation. Obviously, guys, opinions, everybody can have them. There's so many opinions on the market right now. I think it's too early to tell what the Trump impact is going to be on the overall economy in terms of tariffs, in terms of inflation. A lot of people are saying that tariffs are going to cause inflation, but that still remains to be seen, right? Also, how energy prices are going to improve efficiency. Now, oil prices coming down are not necessarily good for oil companies and oil company profits, but for us, the consumer, they're very good, from anywhere from manufacturing to industrial to everything. When oil is a very big input cost for a lot of these companies and the price of oil comes down, what do you think happens to the efficiency ratios and the margins of all the companies that are using oil in their production processes? Well, they all get margin improvement. So it can actually do wonders in terms of oil coming down. That can help industrials. And the fact that rates will be coming down as well should be helping financials too. Keep in mind, if the consumer continues to remain healthy and we do not have a deep form recession and everybody keeps their jobs, well, people are going to be going out and getting loans while the interest rates come down too. So that should kind of boost the net interest income for financials as well. So guys, a little bit too early to tell. So take this analysis from David Russell here with a grain of salt, but he does have a point, right? But a lot of uncertainty. One thing that is for sure is healthcare, which is one of the reasons I'm not playing healthcare at all, guys. There's too much uncertainty. I would rather wait one extra month, maybe a little bit more, to get Trump's stance on what he's going to do in terms of healthcare insurance, and also RFK Jr., what is he going to do in terms of transparency for pharmaceutical companies and stuff like that, right? So a lot of uncertainty in healthcare right now, which is why that and oil are two sectors that I'm not really keen on touching. However, there is concern among investors and economists that the central bank could be making a mistake and risking a stock market bubble or sparking more inflation, talking about the 95% chance of a quarter point cut tomorrow. Now, keep in mind, guys, this as well, right? There is concern, but it is not overall consensus right now. As long as the interest rates are maintained above the level of overall inflation, that can provide a very good catalyst for inflation to continue to kind of be squeezed to the downside, right? So I don't think personally that the Fed is overshooting the goal here by bringing rates down the way that they have. Rates will be pretty much 450, 475, and keep in mind the overall inflation number is between 2.5, 2.8. So you still have a very wide margin of error, and as long as the interest rate is above the rate of inflation, well, it's very hard for inflation to truly run away. And we know after looking at all these companies' earnings, consumers are still being very picky as to where they spend their money. It's not as if everybody's going out on an absolute spending spree, are they, right? So where is the actual inflation going to come? Well, we've been looking at manufacturing output, different economic data points and whatnot, and it all points to the fact that the consumer is not really going out and over leveraging right now. So if there is inflation, it's definitely not going to come from that front as a whole. But as I said, very complex topic, and we will just move forward with the data. We will also be data dependent on the channel. I still remain cautiously optimistic for the markets and for the economy, but if the data starts to show some negative trends, especially in that jobs data, well, then we will have to adjust our positioning and adjust the narrative as well. well. So it's a moving target, essentially. November's retail sales figure came in better than economists expected Tuesday, adding to the concern that the Fed may be taking unnecessary action. And they're talking about this one right here, retail sales coming in at 0.7. So what is it right now? What does the market actually want? The market on one side wants to see signs that the consumer is not struggling. And with this retail sales number, the consumer is definitely not struggling right now. So you're kind of, when you kind of get out of the recession narrative and post very good sales number, it's funny. Then people start jumping into the, well, inflation is going to come back narrative, right? So what exactly does the market want? It just goes to show you guys, the market is a very funny place right now. It's a battle of narratives, right? Some people are saying the bear case thesis is a recession, a lot of job loss, and the consumers are not healthy, they're not spending. Look at these retail sales. But then when you get good retail sales, it kind of dissuades the recession opinion, but then people start talking about inflation, right? So it's very tough to find a middle ground, which is why you guys realize how tough of a job Jerome Powell actually has in terms of threading the needle with these rate cuts and with these policies. So that being said, that's pretty much a recap for the day and the rotation between value and tech. Hopefully you guys appreciated that. Now, in terms of the rest, let us move forward as well into the technical analysis portion of the video. And traditional to my fashion, I'll tell you again, guys, not much has changed. And it's true, we have not broken any major levels, have not broken towards a new all-time high. We also have not flushed the lows here at 602.58. So in the event that tomorrow is a negative day, daily downtrend will be confirmed. And we do have a little bit of support right below us down here, talking about roughly the 600 down to about 595 level. Remaining also the 12 EMA is down there too. All in all, no red flags, because even if we come into a daily downtrend into the next week, next 2 weeks type of thing, who is still in control of this market on the longer term timeframes? Well, it is definitely your longer term bulls, looking extremely strong still, and a lot of space still between the higher lows on the weekly, which is down here at 584. So right now, no major red flags, just some sideways consolidation as we move through this battle of narratives and through this battle of rotation between big tech and basically everything else. But one thing's for sure, we need to start seeing the market breadth improve, because at this point in time, I'll bring up percentage of stocks above their 50-day continues dropping. Now own less than half of the market, guys. Only 48% of stocks are above their 50-day. In terms of percentage of stocks above their 200, that still remains a little bit healthy, 58. What this tells me, guys, percentage of stocks above their 50, is just when the election results came out, you guys understand, right? So many names and sectors went on tremendous rallies. Just look at the banks, right? They massively overshot well beyond their 12 EMA on the weekly after the election, and now they're kind of pulling back. So it's completely normal. You can look at tons of different names and tons of different sectors, and they're all showing the same thing. We had a big rally, and now everything is kind of simultaneously pulling back. So I didn't read too much into it, but there's definitely something going on behind the curtains right now, which we have to pay special attention to as to how it evolves. In terms of the QQQs, they're still looking quite healthy right now. Daily uptrend is still confirmed, although the bulls are struggling a little bit. Tomorrow's volatility event is going to provide the catalyst for either new all-time highs or possibly some daily consolidation. If it is the latter and we go into daily consolidation, anything above 519, guys, just looking for a daily higher low for further trend continuation. And I would be targeting these guys right here, 526. That is your most recent resistance, should be support. It's not a very strong level, but we also have the 12 EMA acting as confluence there as well. Now moving into the weekly chart, you'll see that even if we roll over this daily into a downtrend to end the month of December red, well, in terms of the weekly, looking for a higher low, anything above 497, guys, just looking for a weekly higher low for further trend continuation. Tons and tons of space on the QQQs right now. When we go through the big tech list, I will show you that a lot of them have broken above key levels, and if we come back, we're going to use a lot of those key levels as support. So I wouldn't be too nervous about the technology sector as a whole right now. Moving into financials, so financials continuing on their decline. Like how many days in a row is this, right? Let's just put it on. So about, 15 days worth, right? Look at all this time, 18 days, as a matter of fact, calendar days, of course. In terms of trading days, it is only 12, but still, daily downtrend declines simply continue right now. And we know that we're about to lose our last little guy right here. This is the last line of defense, the post-election massive rally on Wednesday, November 6th. And that also lines up with the 50-day moving average on the EMAs. You will see that ever since pretty much the rally started, the most recent leg of the rally in August, we haven't really lost the 50 EMA at all. In the event we do lose it, guys, I will remind you, even though we are in a daily downtrend, who is in control of the larger time frames? It is definitely your weekly bulls. Gorgeous weekly uptrend. So at this point in time, any move lower, still looking for a weekly higher low. Anything above 46.20, just looking for that weekly higher low for further trend continuation. And funny thing, the 12 EMA right here is exactly lining up with the 50 moving average on the daily time frame. So a little bit of inter-time frame correlation right there. That is something that we do definitely love to pay attention to. Moving on to healthcare right now as well. So healthcare continuing on its decline. The sector as a whole right now is daily oversold, as you can see from this RSI. So we could possibly be expecting a bounce soon. I'm not so ambitious as to call the bottom right now, but this whole area is going to be the bottoming out process for healthcare, in my opinion. And we're talking about these levels, 140 all the way down to about 134. Why? Because it's all the previous resistance from back here in 2022 and 2023, we've broken out of there, and now we might be able to use this level as support. I'm not either calling for the pure V-shaped recovery, but can we just kind of putter around over here as we consolidate sideways before regaining strength? Yes, and as a matter of fact, you can see how long they can actually do that for. So no major red flags on healthcare on the longer term time frames, but one thing's for sure, daily downtrend is clear as day right now, still expecting a bounce. And I'll remind you, when the bounce does happen, the bulls need to start everything from scratch. You need to see a very sizable bounce, and then you actually need to get the trend change. A very nice size bounce, guys, without a daily trend change means absolutely nothing. So keep that in mind, right? Because when we have a downtrend, you're always only looking for a lower high. Now, depending on the size of the bounce, if the lower high is high enough, it gives the bulls a good chance of resetting, but it doesn't guarantee them the ability to reset. So keep that in mind on the weekly. Weekly downtrends simply continue right now, not really close to weekly oversold. So we'll see how the bulls are able to play defense in the area that matters the most. Once again, this is all the way down to about 134. Not really touching any names so far, guys, even if some names are at very attractive levels right now, such as UNH, clipping into the 200 weekly moving average. I mean, if you have a long enough time frame and you're willing to withstand the volatility through Trump's inauguration and the possible healthcare insurance reforms, well, then now is a decent time to be nibbling. A little bit of a nibble on UNH, wouldn't be opposed to that. 487 down to 450 is that massive support that has been in place since 2022, so not looking the worst on that name. Moving into SMH right now. So SMH down about 1.3%. And same thing we've been talking about, right? Very tough for SMH to rise without the star player, which is NVIDIA. Need NVIDIA to kind of come alive to really get that lift that you want to see in SMH. That being said, daily uptrend is clear as day right now still. And if we do start consolidating, still looking for a daily higher low. At this point in time, anything above 238, looking for the daily higher low for a possible attack at this resistance range. We've been trapped between two levels right now. 260 down to 250 is upside resistance, and to the downside 233 down about 223 is the support. So we are just trapped sideways range of consolidation. Pretty much since the month of August, we've been trapped in here, right? However, if the star player does come alive, and I do believe it has a good chance of doing it soon, well, that is when you're going to possibly be expecting the rally on SMH and possibly moving into the resistance and closing a weekly candle, guys. If they can finally close a weekly candle above this range, you guys probably know what's going to happen, right? We are going to start putting in that actual rally on the SMH. We'll be able to close above, use this as support, retest, and possibly run, and it's going to look very good. A stock that did this recently, I mean, I know it's not a whole sector, but Microsoft had this exact same setup. 3 months of consolidation sideways. As soon as we closed one weekly candle above, now we're finally getting the follow through. So I think SMH will have a good chance of kind of looking like Microsoft in that respect. Moving on to the Russell. So the Russell, same thing as the Dow Jones, right? I'll remind you, the Russell is basically the S&P 500 of small cap stocks, right? So in terms of the, well, I don't know why it's not pulling up anymore. Let me just see if I can get the, there you go. So see, IWM sector weightings, financials, industrials, healthcare are first. Those three sectors have been underperforming the market as of recently. So it's very normal that the Russell just continues on its daily downtrend decline right now. That being said, it's coming into nice areas of support, which is 232 down about 225. That is your previous resistance range from 2020 and 2021. So you would like to see the bulls hold that. They also have the 12 EMA, which they've kind of been riding this and all the way down to the 26. This whole area, right? I can extend the green box a little bit more, and I wouldn't really lose the values that we're kind of trying to get here, right? This whole consolidation range. Now that we're above it, we should be able to use this as support. But as of right now, no signs of slowing down. It's really just financials, healthcare, and industrials, right? When those start to recover, you will get your sector lift on the IWM. That is the only time that you will find a weekly higher low on the weekly, because as of right now, the weekly higher low is 226, still hunting for a new one, but it's not looking the best, right? We could just consolidate sideways until those sector allocations kind of start performing to where the same standard as they were post-election, right? So moving into the Dow Jones now, lastly, we covered it briefly, but let's do the TA on it. So Dow Jones still also, like the Russell, looking for its higher low, but now the bears have taken back a lot of this move. So at this point in time, guys, the V-shape to all-time highs, daily trend continuation is somewhat unlikely. If we do recover, I think it's going to be a two-step recovery process, more than likely. So now we're coming into the 50-day EMA as well, and you can see that ever since August as well, we have not really lost the 50 that many times. So now we're coming into it. If we lose the 50 and come into possibly daily oversold, I'll remind you the next area of support is 43K, down about 42,500. In terms of the weekly is not looking too bad, but exactly like the Russell, the bears have taken back a lot of this weekly move, guys. If we lose the weekly higher lows at 43K, well, you're going to lose the weekly uptrend, and then it may take several weeks to kind of get that weekly uptrend back. It's not a bad thing. If you lose the weekly uptrend, it doesn't mean that we're going to flush all the way down here, right? It just makes it that much harder for the bulls and much longer for them to get that recovery in motion. As a matter of fact, we lost the weekly higher lows here, and we flushed. And then see how long it took the bulls to get this one back. So I'm not saying we're going for the ultimate flush in the markets right now, but if we do lose that level, it's going to take the bulls a little bit longer to actually recover. So that's pretty much it for your big tech rundown. Hopefully you guys appreciated that. Now, in terms of crypto, I mean, we did crypto yesterday, so not really going to do it much today. But all I can say, guys, is we're just looking still for a Bitcoin higher low. It's looking pretty good. We broke out of the 100K down to about 98K range. If we come back a little bit, guys, just going to retest it as support for a possible daily uptrend continuation. Not looking too bad at all. Excuse me. And even on the weekly, guys, it's just a beautiful, gorgeous weekly uptrend. So depending on which proxy you're playing, whether that's BITX, whether it's MSTR, whether it's the miners, anything, your guide always has to be Bitcoin, right? And as of right now, Bitcoin's not looking too bad, but if tomorrow's a bad day for the markets as well, and Jerome Powell is not kind to us, I will expect Bitcoin to pull back into this level as well. So watch out for it as support. Maybe opening up some decent opportunities to write some puts on MSTR, which I've been loving doing recently because I can get so much room on those MSTR contracts. You can see right here, we had one contract last week, right? The 295s, we got $225 for them. And now they're pretty much 70% profitable. They were a lot lower than this today. They're good to close pretty much, but this is the way that I like playing MSTR. When it drops a lot, I write contracts way below the market, and it can provide a decent opportunity to collect that premium. So that's one idea that I'm exploring. Altcoins will do more in depth tomorrow because as of right now, nothing much is truly moving. Bitcoin is still the dominant factor for those. Now moving on to big tech, shall we? So moving on to big tech, let me just check the length of the video. I'm doing pretty good today. Not talking too much, I assume. So moving on to Apple today. So Apple just continuing on its dominance, guys. 1% to the upside, smashing through that 250 resistance level. And Apple, I mean, has been carrying the market. This and big tech has been the trade. And you might remember when I was talking about early November, right? You may remember why I positioned so heavily into some of the big tech names. You can see that a lot of my leap contracts and leap calls in this one, they're all big tech. I have a lot of Microsoft, some Google, some Amazon, and I was saying that it was possibly one of the easiest trades in the entire market. And we were not wrong. It did prove to be one of the easiest trades in the market. Here's the Microsoft leap as a whole that we took earlier when Microsoft was around 415, 416. It's already up 26%, and I'm all the way out in June 2026. So that one is moving very nicely right now as a whole. So big tech continues to be the outperformer of the entire market. They're basically carrying the market on its shoulders. But as I said, it cannot last forever. A lot of these names are in daily overbought conditions. Apple, prime example number one. 80 on the daily RSI. That cannot last forever. It's Apple, not Palantir. You can see when it touches 80 on the RSI, let me just put a line right there and go back historically, right? You can see this is usually when Apple sometimes meets a local top. It doesn't mean it's going to absolutely flush from here, but you can see this last event right there, when it happened, this was a local top, pulled back, and then gave another rally. So we may be expecting a pullback on some of these big tech names sooner than later, in my opinion, right? So daily uptrend right now is clear as day. That is for sure. Looking still for a daily higher low at this point in time. Let me just check the hourly. No red flags on the hourly, never lost the daily trend right there. So the daily higher lows, as a matter of fact, stay put here. This is still one leg. So moving on in, guys, any pullback lower, just gonna be looking for a daily higher low for possible further trend continuation. Keep an eye on the RSI, getting a little bit rich. I definitely would not be willing to buy Apple all the way up here. However, if this does lead into a slight decline, maybe over the next week or so, week, 2 weeks, we could have an opportunity somewhere between 240 and the lower end down here, 230. It's gonna be the classic breakout retest, right? Break out of the all-time high range, retest possibly, and then run. That could be a juicy opportunity, and is going to be the opportunity that I'm looking for in Apple moving forward. Moving into AMD right now. So AMD continues to be a little bit of a pain point in semiconductors, but like I was saying in yesterday's video, guys, I think this one perhaps is ready. Now, in terms of how fast, right? It's probably not going to be too fast unless we get a broad sector recovery in terms of semiconductors, which some of them are starting, right? We had some bright points today. ASML, you can see it's coming off the bottom. It's still got a lot of work to do, right? But it's coming. Micron as well. We'll see how those earnings come, but it's also starting a little bit. You're starting to see some of the names that we don't cover that much on the channel. I mean, On Semi gave back a lot of the move today, but they were up nicely. A few names here and there, LRCX, you know, they're trying to put together some form of accumulation zone to try and go for the pops. So we'll actually see if they can actually get it done. And AMD and NVIDIA are key components in that, guys, because they do have decent weights as a whole, right? AVGO is big, but NVIDIA and AMD, not gonna lie, they do represent some very decent weightings in the index as a whole. So if those come alive, guys, you know, I do think that AMD is going to have a very good, let's just put it this way. The risk to reward right now is quite favorable. The risk, in my opinion, is not that deep, possibly down to about 105, 110, let's call it, right? All the way down there into this last area of support below, by the way, the 200 weekly EMA, which we have not really lost since 2022. And you can see the amount of times we've lost it in the history of the company. Not that often, right? So it could be a decent opportunity, but that is the risk. And if you have a long enough time horizon, your reward, I mean, here's take profit number 1, the weekly highs. Here's take profit number 2, and TP number 3 is all the way up there. So the risk reward is very, very attractive right now. Like, here's your risk, right? And here's the first stop of your reward. It's a 2.5 to 1, just at TP number 1. So looking pretty decent, guys, in terms of risk reward, if you're willing, of course, to take on the risk, because I'm not saying it's a riskless trade. Nothing is. Now, that being said, daily downtrend is still in motion right now, looking eventually what the bulls need to do, since they're in daily oversold conditions right now, and we're coming into the bottom end of our last line of defense, which is pretty much down to about 125. I mean, I didn't put the box all the way down to 125. Let me just do it right now so you guys know what I'm talking about. There you go. So now you can see down to about 125. That is the range, and you can see it's come into play a few times for the market, right? It's acted as resistance here, and even if we pull it back even more, you can get a few touches all the way there, touch there, and you can see, right? Now, it's the final stop before embarking on the last line of defense, which is down there at 110, 105. So daily oversold, still holding ever so slightly this support box right now. What the bulls need to do is, since it's a daily downtrend, you need an engulfing move and get the daily uptrend back. Only then will you be able to say, okay, the weekly lows are set, and then we need to start attacking this second leg down on the weekly and do the same thing. Start reversing into a weekly uptrend, and only then you'll know that the monthly is now bottomed out, because they have no time frames. It's a monthly downtrend, it's a weekly downtrend, and it's also a daily downtrend. So the bulls, a lot of work to do. So if I'm playing this one with some leap calls or something like that, I got to put a lot of time on them, guys. Like, I'm talking late 2025 and even into 2026 if we want to really maximize those possibilities for the options and allow the stock to kind of run and come into its bull thesis, which is really the expansion of its fundamentals from the data center ramp. The analyst price targets do agree that that is the thesis, and an EPS ramp is also guided to the upside. Heavy ramp on EPS and a very heavy ramp on revenues as well through 25 and 26. So could just be the time now for a little bit of a nibble, and I most likely soon, I'm waiting for tomorrow for Jerome Powell, Most likely soon, I will also be opening some leap call contracts on AMD, but with a lot of time on them, guys, and these may take a while to play out, but I am fairly confident and I like the risk to reward profile. Moving on to Amazon right now. Well, not that much to say on Amazon, not as much as AMD, of course. Amazon, just a beautiful, gorgeous daily uptrend right now. The higher lows are set right here at about 225. So at this point in time, guys, any consolidation looking for, as they're trying to do today, right? Looking for a daily higher low for possible trend continuation if we flush 225 as a whole and set up for the daily downtrend scenario. Just understand who's in control here. Looking very good for a weekly higher low for possible further trend continuation. And all the way down here, perhaps, let's call it about 220. The start of this range down here, all the way down to about 215. 215 is a ways away now at this point in time. It's about, 7-8% to the downside. I don't know if we're going to actually get there, or maybe the bulls put a stop to it at like 220, but this is definitely the closest region of support that we do have on both the daily and also the weekly time frame. So pay special attention to the rotation, guys. Daily overbought conditions right now. And as I said, if the money rotates out of big tech, there is a lot of space for that weekly consolidation. They've ran a lot, but now that money has to go somewhere, and in my opinion, it will go into value. So can we see some declines in big tech moving forward over the next 2-3 weeks? Yes, but keep in mind who's in control. The weekly bulls on all of these ones, just looking for a weekly higher low for further trend continuation. Moving on to Google right now. So Google also not looking too bad either, but kind of peaking out. It poked its head above 200 all the way to 202 and then gave it all back and then ended red. Top to bottom sell down here, guys. It was over 3%, right? Talking about, well, just under 3% as a matter of fact, slightly 3%. Let's just call it, okay? So moving on further. Who's in control right here? Well, it has to be the daily bulls. It's a beautiful daily uptrend right now, looking for a daily higher low for possible further trend continuation. At the current time, the higher lows are here, 191. Now, in the event we start rolling over too much and set up the daily downtrend with the rest of big tech, mind you, who's in control of the weeklies? Well, it has to be the bulls. Right now, you understand what I mean. There's a lot of space that's been created. So if there is a rotation out of big tech, or maybe the whole market just pulls down, they're working with a lot of space and they have the weeklies. The next line of defense is 191 down to about 187, which is your previous all-time high range. And this could open up some opportunities for Google. If we come down into here, I will maybe be looking to write some short puts in the mid to low 180 range. So not too bad. And Google's fundamentals are absolutely fantastic right now. It was a great buy down here. So hopefully you guys are up a lot, because we definitely are. We pretty much smashed that trade out of the ballpark. Moving into Meta right now. So Meta down about 0.77%. Same concept as the rest of big tech, right? So Meta has ran a lot and now just consolidation at the top, unable to make new all-time highs. So that being said, Meta still just pretty much in a daily uptrend right now, looking for the daily higher lows. At this point, anything above these guys here, 606.50, just looking for the daily higher lows. And then the event we start flushing and set up the daily downtrend, which is kind of looking like we're going to do right now. Same concept, guys. A lot of space created on the weekly. What are we looking for? Weekly higher lows for possible further trend continuation into 2025. Now, keep in mind, this is one of my favorite setups as well. They are all the same setup. Apple, break out of the all-time highs, possible retest setup for a long. Amazon, break out of the all-time highs, possible retest setup for a long. Google, same concept, break out of the all-time highs, retest, possible setup for a long. Meta, same concept as they all look the same. Breakout, possible retest setup for a long, and I'll remind you that retest area is 600 down to about 580, 585, looking quite good with the 12 EMA too. Very decent uptrend on the weekly, looking very good. The fundamentals are fantastic right now, and even into the lower $600 area, the PEG ratio is not too bad at about a 6, or sorry, I'm saying 6, I meant $600. It's about a 1.9. In terms of fundamentals, they've been improving fantastically. Net margins are amazing. And the guidance for next year is fantastic as well. The analyst price target averages are between 650 and 800. And as you can see, EPS expansion, big ramp coming from Meta, and revenue expansion as well, doing very well, guys. No red flags. If anything, this EPS expansion is the thing of legends. After kind of stagnating here for a while, they're driving so much money now to the bottom line. Moving on to Microsoft right now, same setup, guys. Like, these are just classic setups that you guys need to add to your tool belts, right? So daily uptrend is clear as day right now on Microsoft. Daily higher low is set. and looking for the continuation of the uptrend, right? The next resistance area for Microsoft at this current time is the previous all-time highs at about 467. Looking poised right now. Even if we do pull back though, let's say we pull back and we flush these lows at 445. Well, what are we going to be looking for here, guys? Daily downtrend, and you guys know the drill. If we go into some weeks of consolidation, understand who's in control. It is your weekly bulls with the beautiful weekly uptrend, the beautiful MACD, which I'm probably in the way of right now, but you can see 6 months of downside into finally MACD cross to the bulls. So any retest, in my humble opinion, going to be a beautiful opportunity for a long into that region for a continuation. That is 435 down to about 422, where I'm going to be willing to possibly add to some of those Microsoft positions, but nothing wrong with the company. They accumulated for a very long time, so I would not be surprised, guys, if this is just a retest and then pretty much distribution phase of the stock. And usually when you get a tight range like that, you can throw the fibs for some extensions on it, right? The tight range, I mean, I'm not going to use the highs because it was more often in the range this year than not. The next target is, funny enough, the 1618 is the all-time highs. And beyond that, the next price target indeed is around 511, 510. So that is going to be my target as well for closing some of my plays on Microsoft. Probably first stop is going to be the all-time highs, 460, and then the next one's going to be about 513. My leap, though, I will hold into next year because I have so much time on it. Moving on to Netflix right now. Netflix not looking too bad, and this is a circle we left on the chart from yesterday, but not much has changed. In terms of Netflix, not looking too bad at all, right? We know the daily higher lows are planted 903. In the event you lose 903, daily downtrend is underway. You will lose the 12 EMA, which is the short-term time frame guide, which you should be paying attention to. And if we lose that in a big way, daily downtrend is now starting. And of course, what are we looking for here, guys? Well, who's in control? The weekly bulls are clearly in full control right now, just looking for a higher low, and so much space, guys, on the weekly. Anything above 750, looking for that higher low. I'd be looking for down here, right? 860, 850 pocket, running into the 12 EMA that's going to catch up to the stock price as well. And that was kind of the last area where you kind of consolidated a little bit down here. 850 down about 840 pocket-ish. Seems like a good area to me on the daily. That's also the 50 EMA. So we'll see what happens in terms of Netflix. But this one also came into daily overbought conditions, and now it's kind of struggling to hold on to the gains, but not looking too bad at all. Now moving into NVIDIA. So NVIDIA. So the Head and Shoulders prophecy has been fulfilled, coming exactly into the support area that I've been talking about for the last 3 weeks of time, 130 down to about 125. And you see the bulls today, when we came down into here early morning, they started to play defense, guys. Watch for this. Give me a second. Thank you. So watch for this hourly uptrend expansion. If they get the hourly uptrend expansion, guys, your daily lows are set, and then we'll be watching for the size of the bounce out of this area. If the bulls can engulf most of this move up to about 138, it gives them a great chance of resetting into a new daily uptrend, putting an end to this weekly downtrend as well, and going for the weekly uptrend reversal, guys. What have we been doing? We have been establishing monthly higher lows. Now, granted, it can go lower if the rest of the market sells off. NVIDIA can go lower, and I will be DCAing into more positions, especially leap call contracts in the roughly, let's call it 125 down to about 115 area. I would like to go shopping in that pocket. Still have not started a leap position on NVIDIA, but is very, very close on my watch list. Them and AMD, guys, I think are representing some decent opportunities. I already have some swing trades on these by the means of short puts right now in terms of just acquiring some shares at these lower prices. All in all, though, it is not looking terrible. First line of defense, 120, 130 down to 125. And if for so much reason we get through this one, guys, this is going to be the absolute beautiful shopping destination that I'm looking for. 120 down to 115. They're both very decent levels. So all in all, NVIDIA, even though it is weak right now, what's not weak is the company's fundamentals. And you have to remember the thesis for the company. Their valuation right now is pretty decent, all things considered, for NVIDIA. Right now, the PEG should be sitting up at a 1.8. It's not all that bad. A ton of growth, a ton of demand into 2025. I'm still very, very, very bullish on this company, at least for the next 2 years, as they continue to provide the best products in the game right now in terms of building, scaling AI operations, the compute power required for them, of course. Tesla continues on the absolute rocket ship, right? So Tesla right now, overbought conditions on the daily RSI, 83, but Tesla is no stranger to overbought conditions. It can go, you know, arguably this is coming into kind of terminal velocity, if we want to continue using space terms and whatnot. See over here, hit, and then eventually gets a pullback. It can move higher, but one thing's for sure, a pullback will be required sooner than later, in my opinion. Overhead resistance stays planted at about 500 psychological. What a rally by Tesla. So congratulations to all the Tesla bulls out there. One thing is for sure, clear as day, daily uptrend in motion right now, no secret there, right? And on any pullback, guys, just looking for a higher low, anything pretty much above 346, very far away, looking for a daily higher low for further trend continuation. And even if we pull back hard, set up the daily downtrend, that is when I go shopping here. 410 down to about 380 is the pocket that I'm looking for. Same concept. It's a classic breakout. Breakout of where, you asked? Well, I'm glad you asked, guys. The previous all-time highs. Breakout, and I will be looking for a little bit of a retest trade in the event that the consolidation on Tesla lasts 1, 2, perhaps 3 weeks. Anything is possible, right? I, as a long-term Tesla investor, would love to keep seeing this one just go up in a straight line to $2,000. But we have to be realistic, right? If we do get a pullback, I'll be looking for some swing trades in this area for further longs. Everything is looking very good for Tesla. Just be a little bit careful positioning up here, guys. It's not a secret, right? If you're looking to buy up here, you have to acknowledge the fact that you are late. So position your sizing accordingly, right? If we're trying to get into Tesla up here for continuation, it's not a full size position in my opinion, guys. You have to be very, very, very cautious. And then again, watch the price action, right? You should be going with well, not you should, because it's not financial advice, but the way that I trade these momentum plays is I'm using the hourly time frames. If I'm looking for expansion, my stops are always below the higher lows in terms of the expansion, and we're targeting the upside level of 500 psychological. Right now, the risk reward is not the best, not the most favorable. So personally, I'm staying away, but congratulations if you've made very nice swing trade gains recently. And now lastly, our best buddy Palantir. So Palantir down about 1.8% and another 1.38 in the after hours. So Palantir bulls have been battling today, 2 days where early on in the morning, I'm pretty sure, institutions are just dumping the same way as they did down here, dumping on retail, and retail is just buying the dip. I don't know how much strength retail still has to buy these dips every time without Palantir going into some more extended consolidation. That being said, they've built a somewhat of a strong, decent little area of support right here. And this area can be defined as pretty much this range between 72 and about 69. That is an hourly range, 4 hours there as well. On the daily, you can see it too. So that is the level that we're kind of basing our analysis off of for short-term consolidation area. One thing's for sure, it is still a daily consolidation range right now because we're getting a tightening range, right? Highs, lower highs, lows, but also trying to set the higher lows. Very tight range of accumulation right now. But one thing's for sure, if the whole market falls off a cliff somehow because you know, the rotation, the value names keep getting crushed, big tech also gets tired and starts going down, Jerome Powell's not nice to us, Palantir cannot do it on its own, right? It's not as if the whole market's going to be red for a week and Palantir is just going to be flat or green. Probably not the case. So keep a close eye on 68.29. If you flush 68.29, first daily downturn on Palantir in a very long time, as a matter of fact. As a matter of fact, since all the way back here in the month of August, we have not had a daily downtrend. So if we do get the daily downtrend and we flush that support range and we flush this higher low guy right here, 68, just keep in mind, what are we going for on Palantir? Looking for a weekly higher low for possible further trend continuation. And where could that higher low come in if we flush this range? Well, we're going to look at the 12 EMA for a first line of touch. 65 down to roughly the mid to low 60s is going to be that range. And trust me, if we flush this really, really fast, cool off the RSI, there's going to be a lot of people who bought these tops up here who are going to start getting nervous. They're going to flush, sell at a loss pretty much. And then we are going to be able to buy the dip down here with a more respectable area in terms of consolidation in terms of the weekly. We may even see, depending on how quickly it happens, right? You may even see the daily conditions get down into the lower RSI levels, which is going to open up some decent, some better risk to reward than we currently have on Palantir. But as of right now, no red flags whatsoever. We have not lost any levels and the bulls are still trying to maintain this tightening range. So everything's still looking good on the Palantir front. Now, in terms of the positions, guys, so I'll show you guys which positions I have remaining into tomorrow. Not a lot of them, as a matter of fact. Well, not a lot of new positions. We recapped a lot of this stuff yesterday. Not much has changed at all. I didn't add to anything except for one single position today, and that was NVIDIA. When it was down about 3.5% early this morning, we wrote the 121 puts for Friday. It's a DCA because I already have 100 shares at 137 we got assigned with the average cost now with put premium collected was 136.22. We have the 137 covered calls, which we got earlier in the week. So all in all, total credit received, guys, as you can see, you know, and we're roughly talking here, we have an average cost of about 135 on this 100 shares, so not too bad. So now what I'm trying to do is DCA lower. If NVIDIA closes below 121 this week, I will take those extra 100 shares as well. I really don't mind. I like the company, right? And that is the moral of the story. Only write puts at a strike price that you want to be assigned at on companies that you want to own. It makes the process a whole lot easier to manage, right? So we got the 121s early this morning for 62 cents, 0.5% received, and now they're pretty much 56% profitable. They were as low as 20 cents. Could have closed them, but I'll let them ride for one more day. If NVIDIA has a little bit of a green shoot tomorrow, we should be able to close these for a lot of profit, and then I'll kind of just take these off into Jerome Powell. And if Jerome Powell is not nice to us, the market comes down a lot, I might be able to rewrite the exact same contracts for the same or more premium. So we'll see what happens. That is the only new update to the portfolio today. I still largely have a ton of buying power right now, almost full buying power for my wheel portion of the portfolio. And I'll be looking to find some deals tomorrow, depending on the outcomes for the Federal Reserve. I will also be playing Micron earnings. So the way I'm going to play Micron earnings, guys, is my 2 standard deviation expected move, right? So the expected move on Micron tomorrow is 11%. So I want to write put options 2 times the expected move. So if you pull up Micron right now, I'll show you what I mean. So 11%, right? So 2 times that would be 22%. Let's just call it down here in the 85, 84 range. And I want it to also line up with support, big weekly support. So are those criteria met? Is 2 standard deviations away into a big level of support? Well, we can see that indeed, yes. The 200 weekly is down here at 80, and this is where the market bottomed in September and July, rather, and the month of August and September as well. Previous resistance, newfound support. So I like this whole area. So then we take a look at the premiums, and we'll see that tomorrow, for Friday, as a matter of fact, the premiums for 85s are not that bad. 86 down to about 84. I would be willing to stay in this one because keep in mind, we're only in it for one day, right? If Micron goes a tiny little bit down or stays flat or goes up, these premiums are going to collapse out of those contracts. So these are the 3 strikes that I'm exploring for tomorrow's earnings plays on Micron. I'll probably only go with 1 contract just to keep it a little bit light. And even if it comes down there, I'll probably just take the shares. Usually I close these if we come down unexpectedly on a lot of these options plays for earnings. I close them at a loss if I'm not happy with the position. This one, however, it's in an industry that I like. It's an industry that has been left out of favor right now, and Micron should be having a very good 2025 and 2026. So I'll probably just keep the shares in the event that it comes all the way 22% lower. I'll probably end up just actually claiming the shares, being assigned the shares, and then I'll just run the wheel strategy with some covered calls, right? So that's pretty much the outlook for tomorrow and a quick little recap on the portfolio. That's everything that I had for you guys today. Tomorrow, I'll do a little bit more in terms of other swing trade opportunities. If they pop up, we'll take a look at the high flyers tomorrow as well, the SoFis, the Soundhounds, stuff like that. We covered a lot more of those yesterday and a lot more in depth in terms of positioning too for the portfolio. We covered Uber yesterday, whatnot. So if you want to know about all these plays I have in my portfolio running, you can also go to yesterday's video. At the very end in the video description, you'll find the My Trade section. I spent a lot more time on it. So that's everything I had for you guys today. Once again, appreciate you guys tuning in. Once again, I know the audio, I know it's not the same setup as usual in terms of the audio quality, the video quality. Hopefully you like my purple influencer LEDs that I got behind me. Anyways, still traveling, guys. I'll be back home Thursday. No video Thursday because during market close and after, I'll be flying back home. So no video on Thursday, but I will be giving you guys a full video on the Friday session as per usual. So thanks very much for watching. If you enjoyed today's video, consider dropping a like. Would appreciate it for growth of the channel. Consider also subscribing to the channel if you're new. We do these every Monday through Friday after the close, except for this Thursday. And lastly, if you have any questions whatsoever, please feel free to leave them down below in the comment section, guys. I will gladly reply to you in the next 24 hours. And in the event you are interested in the Discord service, guys, which I present every video, but now unfortunately the Discord is closed. And yeah, so pretty much if you are interested in the Discord where I give all of my trades in live format, the put wheel trades, the call options, the leap call options, the debit spreads, the share trades, any form of trades that I take, I always post them in real time. A lot of our members have also found some very good success implementing our strategies that I do give in the Discord channel as in the Discord service as a whole. We also do private morning live streams Monday through Friday after the close, Monday through Friday mornings for about an hour or 2 hours in the morning where I do live trading as well. We have private videos on trading strategies, trading psychology, and different things like that. And also you can chat with me all throughout the day and ask me your questions on your stocks, your options, get a second opinion in real time. So if that's something that interests you, the link is always down below in the description. And if not, well, I guess I'll see you back on the channel, guys. Take care. That's it for me. Love you guys and peace.